I think it's hard to say. I think if you look at all the asset classes out there, it's fair to say that equities are probably the most attractive asset class out there, but they're probably not the. It's more because they're relatively attractive to other asset classes. The equity markets run quite a bit. Typically, we've seen these March, April, May kind of swoons. I wouldn't be surprised if we saw a little bit of pressure in the spring, like we've seen in the past couple of years, just given how far we've run so fast here.
Well, a lot of other strategists are foreseeing a correction in the offing. How are you positioning your fund given that? What sectors or stocks are you selling or about to sell?
Well, we still like healthcare. Healthcare's valuations on a relative basis still look quite attractive. We like industrials, are probably our two favorite sectors right now. We tend to be underweight energy and material stocks, who have also had a nice little rally here, and we've been paring back our exposure to those two sectors on strength. But I think typically, if we look at the equity market today, Fred, we would say that we still see a lot of the high dividend yield stocks as quite expensive, and we see a lot of the growth stocks as quite expensive. We're trying to buy companies that have a little more stable growth, maybe with a little bit lower dividend yield, where we feel pretty confident, even in a tougher economic environment, they can still generate nice earnings growth for us.
So a lot of things have appreciated. Where are you finding the value?
It's hard to find a lot of value in the equity market today. It's actually hard to find a lot of value in any asset class that we participate in today. Like I said, I think where we see value in the marketplace today is probably in companies that are a little more stable growth, a little bit lower than average dividend yields. There are companies that are returning capital to shareholders at a nice pace, companies that have margin expansion opportunities. A couple examples that come to mind would be like an AutoZone, which is a pretty stable growth company, buys back a lot of its stock every year. We also like a Danaher and a Unite Technologies within the industrial space, both very well managed companies, very good on capital redeployment, and just very well managed companies.